afternoon to you. The weather is great. Thought it'd be raining a little bit today, but yeah, the sun's come out. A very warm good afternoon to everybody. Welcome to episode 7 of the COVID Economy. This is one of our very niche broadcasts where this semester we're bringing back a lot of alumni. Previous Monash students who have graduated, who've done well, who've gone out there and really been very successful. And it's my very great pleasure, everybody, to introduce Colin Chu to you today. He graduated from Monash University almost a decade ago, isn't it, Colin?
Yes, about 2011. So yeah, almost a decade.
Yeah, almost a decade ago, and he is. He did property investments with me at Clayton, and he's now gone on to found his own property development company, building. How many properties have you built so far, Colin? In your
We're going to be building about 200. We've finished about 33 so far. Yeah.
So yeah, I would, and Colin's still around in COVID-19.
Yeah.
So I would say that Colin is an amazing success. He's a wonderful Monash success story. For those of you who have done property investment, you will see his face on Moodle. Yeah, he actually got lots of great benefit from our second property investment assignment. For those of you who aren't familiar with property investment is a specialist unit that I teach at Clayton, which is an elective that any student can do either from Caulfield or Clayton. For those of you who are interested in that particular unit, I'll put it in chat for you. It is BFX 3355. So without further ado, I'll let Colin introduce himself to you, and basically the way in which we're running our little chat today, our little session today, is that Colin will talk about his story, what he did at university when he graduated, then what was his journey to over the past 9 years to building his own company. And then after that, we'll take questions from students, and then after that, we want to address after that background, we want to address the very important question: how has COVID-19 affected his entrepreneurship? How has COVID-19 affected his company? So, Colin. Oh, by the way, if anybody has any questions, please feel free to put them in chat. We're very informal today. Yep. And later on, if you have any questions, please ask. Think of Colin as you know, one of your tutors and one of your lecturers. You know, please feel free to unmute yourself, ask questions. We're very informal today. Go ahead, Colin.
Thank you for the very nice introduction, Jason. It's I'm very happy to be here to be sharing with you guys. Just a little bit on that. Before I talk about myself, I'll talk about that assignment. In case, I'm not sure if Jason shared, but basically what happened was that I was doing the assignment. I decided to build, I used a little bit of spreadsheets here and there to generate, to do the assignment basically. And then when I went to work 3 or 4 years later in property, I pulled that out of my old hard drive and found that it still works. And so I created a spreadsheet for real life work, so when I was presenting to my customers and clients and investors, I was using that sheet. So obviously Jason and I got reconnected in 2018, and I showed him that spreadsheet, and he's like, "Oh, can I feature you in our assignment?" I said, "Sure." But anyway, yeah, I graduated in 2011 from Monash. Did fairly well. I was really a bit of a nerd back in uni. Wasn't in the property space back then. I was in banking and accounting and finance. And my goal back then was to work in an investment bank, which I did. I graduated 2011. Was planning to do my honors here. And what happened was that I got an offer from JP Morgan Bank for their graduate program. And I was confused because I was thinking, maybe I should continue studying. So I went to see my honors prof, who would have been my honors prof, Dr. Aoyong Hui Hua, I believe. Yeah. So she looked. I showed her the offer letter. I was saying that, look, I've got an offer from JP Morgan. I've got, but I would like to do your honors degree. And she gave me the, "Are you kidding me?" look. She said, "You've got a job. Go for it." Yeah. So that's why I didn't continue my journey in Monash. I went straight to work after that. It was a good decision. Spent 2 years in investment bank, learning the ropes, doing well, and then I jumped over to a hedge fund as a trader, and then after that, loved the job. Very very high intensity. Very it's one of the most high intensity jobs I've ever had, even today. But after about 6 months, 8 months, my body was giving out on me. Basically, I was falling asleep, in front of my desk out of exhaustion. So after that, I decided to get a day job, and that's when I met my ex-boss, and that's how I got into the property industry. So helping clients assess commercial as well as residential real estate investments, very similar to what we did back in BFX 3355. So that was one of those things that really got me started. And about 3 years later, that was 2016. That's when my partners and we decided to set up Huon Property Group, which is my development company, and we took on our first project, and we've been going ever since. It was a very interesting journey into this, because actually this is my company now, but it wasn't that way. We founded it as part of the company that I was an employee of, and with the idea that this would be a subsidiary. But once you've taken something and started with it, we started to see divergence between my first company and the head company and the subsidiary development company that we founded. And a decision was made in 2018 for us to part ways. And in fact, a lot of our investors were telling us that they'd rather we part ways. So this is how we then had this company of our own to build. And it was a very good decision, because we've grown from strength to strength ever since.
So sorry to interrupt, Colin. Do you have sort of a website for Huon Property that maybe at a later stage you can put into chat for students, so that at the same time, they can have a look, have a bit of a visual sort of feel for your company?
Sure. That's my company website, but maybe I can just present it. I've got some slides that I did back then.
Yeah.
So maybe I'll just do a quick show and tell. Yeah, you can see my screen, yeah?
Yep.
So just give me a second. Yep. So this is the Huon Property Group is the company, but the Anchorage Group is basically the Singapore company that we own. We own shares in Huon. Basically, we've got other businesses as well, but I head up the property development business. There are other lines of businesses as well in Asia. So these are my partners, and Stephen and Gareth are also Monash students. So we knew each other in school back then. Stephen was my roommate, or rather my housemate, in uni. So just for all you uni students, the guys that you go to school with may very well become your partners in business or colleagues down the road. Yeah. So these are just some of our projects. We've completed them. This is my next project, which is the big one, doing about 200 units, 200 landed property. This is $100 million project in total. Yeah. So, I shared. This is a slide I did for the Monash Entrepreneurial Club. So, yeah, just sharing that we all started work. Started our journey very long ago. That's me and Stephen at our apartment. After presenting for the UBS Investment Banking Challenge, and we were having champagne, thinking of how to take over the world back then. That was the journey. That's how it started, But we work with friends. One of those interesting things is that working with friends, I share with the guys in the Entrepreneur Club. Do not take the friendship for granted. That's one of those things people always ask me, how do you work with friends, because friends always cut each other some slack. It's one thing to cut each other slack when you don't expect it, but when you are the one giving it. But friendships always get frayed when the other party's trying to, cut me a break, man, because you wouldn't do it for any other person that's working with you. And the key thing, I guess, is high expectations of performance. Not because of the friendship. and my view is that because you are my friend, I expect more out of you, not less. Yeah. And of course, leave ego, greed, and pride. And with friends, ego is a big thing, because in uni you have that group of friends. There's always a pecking, especially among guys. There's always a pecking order, and sometimes that can get in the way when you're in a business situation. But we all have to keep in mind that this is the real world, and dollars and cents are really lost if you bring ego into it. It can be very expensive. Yeah. So
Colin, just before you continue on,
sure.
We've got lots of students asking questions, and I
Sure.
thought that we sprinkle all the questions in with the presentation.
Maybe I'll stop the share first, and then we can. Yeah.
And Ethan asks a really nice one. Ethan asks, what is the difference in daily life between IB and, I assume, hedge funds, and what you do now? So, yeah, that's a very good one.
So, well, look, in IB, it's okay. IB and now it's not too different, to be very honest. It's still high paced. You're working on deals, right? Hedge funds very different, of course, because that's trading. You're scanning the screen. You're reacting. You're not thinking too far ahead. You're always looking at the price of the security that's trading, and you're just trying to guess which way it's going to go. And to do that, you do your research. So every day you wake up early before the market opens, and but I was in FX, so the market's always open. But when I say early, you get out there before a particular volatile period, which is the market open. You get your research in, so you know which way it's going to go, and then you trade. And pretty much everything goes as a blur until the end of the day. And then you're generally too tired to think about anything else. And then rinse and repeat. And if you are unlucky enough to get into foreign exchange, which is my security, which is a 24-hour, 5 days a week thing, then it never ends. Whereas for some of my colleagues in the security of equities, they at least get a break at 5 p.m. But now, same thing. Now it's more you're looking at a deal. You've always got things to do. I'm running operations as well, so I'm doing kind of not just meeting people and speaking to people on the deals, funds, but I'm also working with contractors, making sure things get done. So I guess IB is very different from finance, but IB and what I'm doing right now is not too far different in terms of the tempo. But in hedge funds, it's high intensity every day, every time you are working. Now, in terms of the modeling in Excel and the different daily items, look, the model just calculates. We always call models garbage in, garbage out. So whatever assumptions you put in is what you spit out. So same thing, whether you're talking about investment banking, corporate finance deal, it's all in the assumptions. And it's different in property, same thing in property, or you're looking at acquiring a company. There's still all these discounted cash flows. Their principles are all the same. So it's fairly similar. And particularly for me in BFX 3355, it's the same thing. I just changed, instead of analyzing Kellyville, I was analyzing Glenn Huntley, and putting the figures that you find in real world research, like, realestate.com.au on RP data, that sort of thing. Yeah.
So, Colin, maybe to sort of help clarify that question as well. Maybe you could tell. I mean, the students know that Huon Property Group is your company, but what exactly do you do there? Really?
So, as what do I do in my company? Well, I'm the managing director here. So basically, I've got a team. I've got people who report to me on sales, on operations, on finance. So that's my job, is to assimilate those information and then give a direction. So I get in the weeds as well. My main job is business development, of course. You could call it investor relations in a way. So I do deal with investors who invest in our company, and they want to know what's going on, what's the plans, and then of course operations wise, I deal with who I want to work with. I've got my operations manager who gets the nitty gritty done. But generally, as a director, that's what you do. You are the general planning the battle. Whereas your managers out there are, the company commanders and captains that are actually fighting it, figuring out how to fight it. You give the direction. So that's my job right now. Now, obviously, to get to this point, you need to know what to do. So before when I became an MD here, it was a funny story as well, because as I shared with Jason privately, that my partner Stephen put me in this role and left me there. So in a sense that it was a big come here be number two, so-called being supporting, being a supporting player. But he obviously had higher hopes for me and knew that I could handle it. So he said, "No, the ship is yours," and then I had to figure out how to do it. But again, that's life. In real life, that's what happens. Most people get to a point they don't want to get promoted anymore. I was certainly at that point because I was very comfortable. But again, with growth, you have to expose yourself to being uncomfortable in order to grow. And that's what happened in 2018. Yeah.
Thanks for that, Colin. I think we read about, and students read about managing directors in textbooks, but until they speak to an actual managing director, I think it's quite rare to actually have a sense of what is it a managing director does. So I think they'll really appreciate you sharing that insight with them. I think
maybe I'll add to that. The real thing why you're big, why you have this position is that the one of the things that stick out being in a managing director is that there's no one else. The buck stops with you. And that's one of those things that takes many people many years to get to a point that they have to be comfortable with. That is to be responsible, and not necessarily that when things happen not because of you, but because someone in your outfit does, you are still responsible for it. And that's one. There's no running away. If you have this title as a director, there's no running away. You can't run away from a decision. You can't run away from things. So that is something I always share with people who are trying to go for managerial positions. I say that be prepared for it.
Great.
Yeah.
Nia, and just to continue on with another question before we sort of head back to your slides.
Sure.
Nia asks a really interesting question. If there was a younger version of yourself in 2020, without all of your current property knowledge and connections, where would you go to learn more about property investing in Australia, apart, of course, from BFX 3355, and apart from this? To this?
Oh, there's so many websites and books. I can, you reach out to me on LinkedIn. I've got a list somewhere I can send you. But basically, books. Margaret Lomas is a good one. I started my journey in property by reading her book, and she was really, really good. There are many others. Books written by hotspotting.com is a good one. That's a Terry Ryder. Yes, Terry Ryder is a very good analyst. He often bucks the traditional, whatever you see in the newspaper and AFR, he always goes against it. He's almost always right. Yeah, and guys like that, people who are not afraid to stick their views. And I'll say the worst place to learn about property is reading what's in the AFR. Because the media doesn't know anything. It's all sensation.
Yeah, I completely agree with you.
Yeah,
I completely agree with you. Wonderful. So yeah, maybe Colin, we could go back to your presentation, and we'll continue on some questions later on.
I can just very quick one. This is I'm just showing what it is. With working with friends. I'll just quickly, because I can see a lot of questions coming up.
Yeah, I think your sort of exposure to what it's like working with friends is because even I recognize some of the students here, and some of them are friends, and they have wonderful working relationships in the units, and they may explore working with each other in the future. So I think
there have been people that we like Gareth, for example, someone I figured I never worked with, but we have. But again, with friends, keep in mind, don't make enemies, and these guys that you work with, they could become your customers, they could become your colleagues down the track. As unreal as it seems. There was a guy that I always feuded with, one of my rivals in uni. Jason, you might know him, Keenan.
I remember that name.
Yeah, you know him. So he's actually a very good friend of mine now, but we were always fighting in school.
Mm.
Yeah. He was always challenging me to grades and all that. Oh, yeah, I did better than you this. Oh, you know, that's and we hated each other back in school. But after we got off the workplace, it's different. Yeah. I was saying the COVID-19, right? It's a major disruption, you know, and credit markets was robbed in end of March, and that was a real first-hand experience of it's a mini Lehman Brothers kind of situation for many development companies, including ours, because that was when financiers got into trouble and they wanted their money. Yeah, and so it becomes, and that's where as managing director, you have to deal with it. No one else can do it for you. You got to talk to them, and you know, depending on how you talk to them, is how whether you present a good enough plan, whether you have a poker face, come, like I said to them, so what do you want to do? You're gonna make me sell this land at this time? I say, come on, we all gotta help each other out, and you doing this to me is not gonna do you any good. Your investors will come after you for losing money. So that sort of negotiate, you put out a very strong front and you show them that you from strength and you have a good plan. And so we were one of those that say, okay, we'll work with you. I know that they foreclosed on another guy, a smaller player. So this is one of those situations where it's a real crisis situation. And there was days I couldn't sleep during that period.
So during that time, when you won in your negotiation with the financier, did they defer the repayments, or did they?
They did. No, they did, and not just that. They agreed to fund our construction.
Wow. They lent you more money.
They gave us more money. Yes, exactly. They agreed, subject to us meeting a few things, which we did.
So everybody, this is really the art of the deal here. In a credit crisis, how do you not only get banks to lend you more money, but also defer that? I'm quite amazed.
You don't have a choice. You either do it, or if not, it's very it becomes very challenging later on. Yeah. Wow. But that's the team. We all work together. It's not just me. It was all of us strategizing. What do we do? If he says this, what do you do? And we had to obviously do it and deliver the message in a clear and concise and yet acceptable way. If you went too hard, they'll just say, go get stuff. So that was one of those situations. But yes, slower sales turnover, and you reassess and manage the risks. We decided to do one of our constructions at a smaller stage instead of a bigger one. Yeah, so that's what happens in business. You reassess, you manage, and that's my job basically, to take the direction.
Colin, would you say that in addition to masterful negotiation skills with the financier, would you say that the quality of your assets had a big deal with why they lent you more money and were happy to defer? Do you think was that a factor?
Yes, absolutely.
As opposed to the other party, the other developer who got foreclosed on?
It's strange because the other side was not. Yes, you hit the nail on the head. The other side was not great. It was actually in Melbourne, Cardigan Street in Carlton. I remember. So that was not a great site. But yes, the quality of asset matters. The price you paid for it, the valuation of it matters. But again, I think they look at the people. Yeah. But I would say that COVID-19 was also a blessing in disguise, because you learn resilience, and this is probably more applicable for a lot of you guys, regardless of what you do. You learn to be a bit more resilient during this crisis. I discovered that I had a fantastic team, people who I didn't think would step up to the plate. Like, for example, I used to travel, to Singapore and Asia, but my guys there are now taking on that role so that I don't have to do it. But yet also in terms of business, you discover some wolves in sheep's clothing. When I say that, there were people who were out there to do us harm, but because of COVID-19, they got into trouble, and then we didn't have to work with them. And then when their employees left, they spilled the beans. So it was like, wow, okay, that's a blessing. I didn't have to work with these guys. So these are situations this is real life. This has happened to my company, and I share that with people because you have to take the positive out of crisis. There's always something we say that, never waste a good crisis. And there are a lot of opportunities right now that we see. Finally, I get to see sites on sale that are selling at a rate that you can make a good project, you can make a profitable project. So that's something that, if, like what we are dealing with right now, we're talking to our investors on potentially coming in with us to do a joint venture on one of our sites. Yeah. So, but like I said, I always share people, I'm from Singapore, so I did 2 years of military service. So you always say embrace the suck. This is not a pleasant position, but you just have to accept that it's unavoidable for forward progression. You just have to do it. Yeah. Yeah. So anyway, I think this is basically I'll probably stop here for now. Maybe we can go to the questions. Yeah.
Sure. So just looking at the next question, Krish asks, can you talk a little bit more about your experience working in a hedge fund? I think we've got lots of
hedge fund.
Yeah, banking and finance students who've watched some Hollywood movies and are very interested in trading, and so yeah, they'd like to know a little bit more about your experience working in the fund.
No, it was the most intense part of my life, I would say. Right, I enjoyed it. It's very intellectual, but when I say I left because of health reasons, that's one thing. But the truth is that after a while, you meet people, and I'll say people, your fellow traders. You become very. I'm trying to put this in a very diplomatic way. Let me just. Okay, I'll share an anecdote which I did. This was 2013, and this was before the Syrian war started. We were at a round table discussing our positions for the day with our head of trader, and one of the guys says, "You know what? I hope the US. I hope they start shooting over in Syria because I've got a shot on the USD." Now, I tell this to ordinary people, they get horrified, which is true. I mean, in reflection, I was a bit horrified, but during that time, it's not, you get desensitized. So that's the thing, you become very invested in your positions, and your positions define you. So that was one of those situations for me that made me kind of think twice, do I really want to continue this career? I love the trading, I love the intensity and the intellectual, but I just did not like those people, and I did not like the people that I work with, some of them. But again, I recognize that you have to be that way. You have to be that way to be a very, very good trader. I would say that I'm not the best among them. I'm good, but I'm not as good as the guy who made that comment. So that's one of those things that I will share in my time in hedge fund. It's high intensity, and again, you become very assertive. And I've seen in my day, even at JP Morgan, before I was on the trading floor, so I've seen some people go crazy. There's a trader in my he would have a pile of keyboards next to the corner, and he destroyed a keyboard whenever he had a bad day. And this was acceptable behavior back then because he was a very profitable guy. Things that in normal companies will never be acceptable is acceptable there. So if you go and read the books, so when I read God, what's that book? City Boys. That's a good book. It's not exaggeration. You read Wolf of Wall Street, that's not exaggeration. So I'll just share that. You read those things, you're like, and my friends will ask me, "Hey, does this really happen?" I'm like, yeah, probably worse. Kind of things like that.
So just to clarify essentially what you were doing in the hedge fund, you say you were dealing in trading in foreign exchange.
Yes,
essentially means you're buying currencies, buying low, selling high, making that speculative profit.
Correct. I was what we call arbitrage arb trader. So trying to exploit market differentials between currencies and different exchanges. So some pricing is different in different exchanges. So you buy from the one that's cheaper and you sell the one that's more expensive. And in that split second, you make X dollars. Again, your positions can be very big, can be very small. Yeah.
And just to finish off before we move on to another question.
Sure.
What tools did you use to actually enable you to make those decisions? Were you aided by computer programs? Did you have lots of technical analysis?
Yes.
Or was it all by gut feeling? Did you talk to, how did you form your positions did you talk to many people in the market?
No, combination. It was a combination, but most of it is technical analysis, and just being diligent and, staring at your screen the whole day, basically. And there are days like, and then we did different guesses. The most interesting guess we had was, as a desk, so you have some guys who hedge against you. So one day what we decided to do was, we looked at all the predictions by all the major banks, and we went against them, and we decided to try this for a week to see whether we would make money. We did. So
how much? Okay, you're allowed to say how much?
No. but yes, we made money on that one. So the banks, we went against Goldman, we went against JP, we went against what's that bank? Lloyds and stuff. Yeah. So we picked a basket of guys that we felt were not reliable, and we went against their predictions. Yeah, and we made money. Yeah. Those were good old days.
Yeah. Maybe let's. Did you have anything else that you wanted to share with the students before we move on?
No. I think we can talk about questions. I mean,
there are a lot. There's so many. And that I think that's one of the best things. So Michael Kruick asks, do you think Australia's capital gains tax concessions and high population growth are favorable to your property investment firm? I mean, you can also probably update that with population growth given COVID-19 and whatnot.
Well, the CGT tax concessions are not that great anymore. It used to be better, but yes, any is better than none. And yes, high population growth is favorable, but not so much for my firm, but it's good for Australia in general, because there's a undersupply in Australian property. To be fair, because the issue is that the demand locally is not exactly that great. So it's always been dependent on foreign demand. And since that's gone, a lot of developers have put their projects on ice. Now, one of the things that made us different is that when we started this company and we decided to go into development, it has never ever been our focus to build projects for investors. It's always been for the Australian owner-occupier. So I've never wanted to deal with the foreign market anyway. It's always been for locals, because that's what is needed. Because there's enough developers out there building shoebox apartments for the investor in China or Hong Kong. So and they are not great. These are not assets that will, we call about the supply, right? They are not real supply, because who really is going to stay in those things or buy those things for future? No, a lot of them will become service apartments or student accommodation down the track. But what we need is to build real homes for Australians, large homes, people that homes that people are comfortable living in. So that's the thing. Yes, high population growth does matter. When we say population growth, we mean not just foreign, but also interstate migrants.
So Colin, the majority, if I understand it correctly, the majority of your developments are not in Melbourne, isn't there?
No.
They're in Brisbane, they're in Queensland. So
yes.
Is there a relationship there between as to why most of your developments are in Queensland, and does that have anything to do with as Michael was alluding to population growth there?
Absolutely. Look, we didn't forecast COVID-19, but we certainly forecast the cycles of each capital city. So in 2014-15, when I first got into the real estate industry, Sydney was starting to wade off, and then Melbourne is coming up, and right now we feel that Brisbane cycle will be this decade, for a multitude of reasons, which probably will be another half an hour presentation on that. But as a developer, you have to be ahead of the curve, and if you can't try to think like a property investor. Property investors, you want to be right there on the spot when it's on upswing. But if you're a developer and you start getting into upswing, by the time you get your approvals, by the time you get your planning permits, the market's at a peak. And by the time you start selling, you could be in a downturn. And that's what happened to a very big developer here in Melbourne that has gone bust as of last year.
Yeah.
So
they're out in the news, isn't it?
Yes, they were.
Yes.
Yeah. So very, very big developer. So they were very good people. I know them personally. I used to sell for them. And unfortunately, again, just got caught in the wrong cycle, and they just weren't planning ahead. They just kept thinking that it would keep going, which we knew back when we started in 2016. We knew that the Melbourne cycle was starting to tire. So we said, okay, I'm not going to pay 30% more than what I think the land is valued. So you apply certain skills you learn in finance and asset management into property as well. So we say, okay, where's next? That's Brisbane. And so that's why we are here.
Right.
Yeah.
So I think that really ties nicely into Paul's question. So Paul, did you want to deliver that question? Your question?
Sure, Jason. So Colin, I just wanted to know about the construction boom that we've been seeing, because there's been a massive construction boom over the past couple of years. When I used to work in the city, I'd look all around me and there would always be these massive cranes putting buildings up, which I assume is because interest rates have been at record lows and it's been extremely profitable to put up new buildings. Do you think that we've built up too much capital stock, particularly in these sort of commercial high-rise buildings, and there's been an overdevelopment? And is there a strong future in property development as interest rates are bound to increase into the future, and in light of stagnant demand as people begin to work from home more, and so on and so forth?
So like I say, it depends on the type of property you're developing. So like if you're talking about commercial offices, obviously that's especially, and it's been exacerbated by the COVID-19 crisis, where suddenly you realize that people can work from home. You don't have to be in the capital city. So as a commercial developer, I'd be a bit concerned. I'd be looking at my contingency plans for the future. But for residential property, same thing actually. For inner cities, I've never been a fan of that, because if you talk about SWOT analysis, right, there's a lot of weakness when it comes to there's a lot of threats, there's a lot of weaknesses when you're trying to develop a tower in the inner city. But again, it really depends on what you're building. Because my next project is going to be inner city, but that's under different circumstances. So it really depends. Are you building nice, affordable homes? Are you building, homes that people love to live in? Because given a choice, people want to live in the inner city, right? But if you're going to pay through the nose to buy one of these assets, then it's a problem. Now, back to the question about the construction boom. There's always been inverted comma boom, because the boom has been driven by approvals. Now, the reality in development is that 2/3 of property approvals coming are never going to get built, for a very simple reason why. First, either the person filing it is just trying to flip the site, and then when the buyer buys it, he's not going to build what someone else designed. He's going to redesign it. It will go through another process. Second, funding. He can't get the funding. So yes, interest rates are low, but funding has never been easy for developers. Developers in Australia do have a tough game in trying to convince their finances why you should build. So one of the main things is debt cover. So they'll ask you for 100%, 80% debt cover, meaning that you're going to get the sales required. Now, if you're building in a city right now and you can't tap into the Chinese market, you can't tap into the markets that was such a cash cow before, you're going to have problems getting that built. So in the past, we actually caught up in 2017 to a point where supply and demand were neutral. But that has gone way down again, because supply has gone way down. People can't get the sales. So a lot of the developments did not get built. So as far as capital stock, too much, I don't see that. Overdeveloping, certainly I don't. If you look at Australia, Melbourne, let's take an example, as a first world city, we are far behind most first world cities in terms of development.
Colin, thanks for that. I think
Yeah.
that was particularly fascinating to hear those insights about approvals and the struggles that developers go through. Krish has got a very interesting question, which ties in nicely with that. They all seem to be related in a very serendipitous way. And he asks about, are you planning to take advantage of the debt market now that interest rates are so low? And I would say,
Which question was that?
so Krish asks, how are you planning to capitalize the market given that interest rates are so low? It's a couple above Paul's question.
Trade secret.
Sorry, Krish, I tried.
Yeah, but Albert, the next question is interesting. You're back in 2011. That one, I like that question.
Sure. Okay.
You've just graduated from Monash, and will you take the offer from JP Morgan, or will you take another path? So I applied for a few banks. After I accepted the JP Morgan offer, Goldman's came in at a significantly higher pay. So in retrospect, maybe the answer should be no. But again, like I said, if I did not meet the people I did in JP Morgan, my life might turn out a bit differently. So I tend not to look back and say I wish I'd done that, because if I was asked a similar question, in another talk, which is that if you could go back before you became an entrepreneur, what would you have done earlier with the knowledge today and going back in the past? What would you advise your younger self? My answer was, I'm not going to advise the younger self, because if I did, he might not have taken the risk and end up, to put me in the position that I am today. Yeah, I might have been still in the bank. I might still be maybe a VP right now in the bank. Who's to say? But I don't regret where I am right now.
Great.
Yeah.
Krish has followed up his question with a very interesting one, and I think something that lots of students are very interested to know about. It's the very last question: how did you attract your first investor? You don't have to worry, because I don't have to build anything as of now.
No. I was just joking. Okay, trying to capitalize the market. Look, again, it depends on finances, right? You have to have a plan. You have a business plan. You pitch. So same thing with your first investor. Look, how do I attract my first investor? Meet, talk, share what I do. And be very open with them. Have a plan. How's my plan going to make them money? And if they believe you, they'll invest you. If they don't, try again. Yeah, that's basically it. Yeah.
And just to add something else on the other side of the scale, for those of you who aren't familiar, I run a property business, and my first investor was my wife. So I think that we often look at it from a very pure corporate perspective, but I think family connections and relationships also can be very important to help you get started.
Was that before or after she was your wife, Jason?
Well, we sort of. No, this is not a talk about me. This is a talk about Colin. So I'm not going to answer. So Michael Crook asks a good question, and I think that lots of students who are graduating this semester or this year are really very worried. I've spoken to multiple students who've had faced multiple rejections, and Michael Crook asked a good question. How do you get job offers from multiple firms? And do you have any advice for the students who are applying now as to how they might be able to in this extraordinary market, how would they get offers, get interviews?
Okay. Look, how do I get jobs from multiple firms? Look, I had the chance. So first off, I had the chance to apply, right, in a sense. And I had the chance to get my foot through the door to the interview. So not fair, but not very fair, but I did get straight HD, so it's a bit. I was a bit of a nerd, as I mentioned in uni, so I did study, and I did, at the expense of some fun, I did study. So the grades did help me get at least an interview. Now, with the JP Morgan one, I can share with you my experience at the assessment center. The guys who were all interviewed, right, who interviewed with me, they were all nerds as well. All of them much better grades, very high GPAs. And I was very intimidated during that assessment center. But the interesting thing about it was that I didn't really have a lot of pressure to get the job because I was intending to do my honors at the time. So for me, it was an experience, and I was just myself. I was cool, calm, cool, and collected. When every one of the others were nervous, I could see it. They were all, you know, they want the job and all that. And because I was natural and I was calm, I impressed the interviewers. In fact, I basically one of the interviewers actually same for Goldman as well. You know, it was same thing for Goldman. There were less people, but it was the same. I was just not very bothered. You know, and I can share with you a few things during my interview process where they asked me a question about. They asked me a scenario question, which is like, oh, if your boss refused to listen to your advice on a certain topic, what would you do? I said, yeah, I'll tell him, and I'll say, I asked the question, how important is this? If it's not important, I'll bite my tongue and go back to my desk. If it's very important, I'll stay in the office until until he or she agreed to hear me out. And she asked, you know, that seems a bit assertive. I said, well, and my response was, well, you didn't. If you're looking for a yes man, then I'm not the guy for you. So I was very upfront, very myself, and I think that impressed them. It came across as very real. So I kind of, at the interview, I kind of had the idea that I did well. So it was one of those things, you know. Once you get your foot through the door, it's on you. It's all on you to impress. And when I say try to impress, just be yourself. You know, but there are always going to be people who try too hard. There's a few guys who try too hard. I always share with people, you know, when you attend assessment centers in finance. So there's always something called assessment centers. So you have one-to-one interviews with your managing, the hiring managers or the recruitment guys. Then they'll put you into a group to do some team assessment. There's always going to be that one guy or girl who's trying too hard to impress, and they come off as an asshole. Just don't be that guy. Yeah, because those guys never ever get hired. And I've compared notes with friends who've gotten in EY, Deloitte. They've all done, and there's always that one guy. Happens to be all guys. Sorry, I'm not trying to be sexist, but it always happens to be guys. Yeah.
Wow, I think that may have been the most valuable part of our talk today. Thank you so much for that, Colin. So you know, with that, everybody, I think that you hear it throughout your entire degrees. It's the same in relationships. Be yourself, and part of that also depends upon your emotional maturity. How do you handle high stress situations? We just finished the Foundations of Finance test, and students were complaining about how stressed they were. But it is how the education system prepares you. One of the ways by which they prepare you for even more stressful situations. So I think having a good attitude and learning how to be yourself, learning to be centered, and getting that practice where it doesn't cost you as much in university, I think.
100%.
Yeah.
100%, yes.
Yeah. Thank you so much for that, Colin.
Yeah.
Great. So let's continue on to. We're actually almost to the end of our talk today. Everybody. And yeah, Colin, would you like to mention some last few things before we finish off for the day?
Well, I mean, what I did. Well, I did. Let me just bring back my slides, which I'll just share with everyone. We're just passing notes on just some talking points that I thought would be good for students.
And perhaps you could also
Yeah.
talk about what you think it means to be an entrepreneur. I mean, lots of students may aspire to start their own business, and what do you think
Well,
they need to have?
well, if they're already aspiring to start on business, you're already one step ahead of me, because I've never had that ambition. I've never had the ambition when I was there. It was very far from my mind. But one thing about me is I was very ready to seize opportunities when I saw them. So that's the difference. You have people who want to start business. I've got friends who are still working for companies, and they've talked about starting businesses since we were in uni, but they've not done so. And when I suddenly I've offered them the chance to come aboard with me, and they were not able to take that risk, or rather, they felt the risk was too big for them to take. But I'll say one thing is the attitude. I mean, for as entrepreneur, you need to have the right attitude for it. But not just that. No, I mean, I'm talking about to find work. It's all about attitude. And I hire people as well, and very rarely do I look at the CV. To be very honest, I take a glance, and if it checks out, then it's all about the attitude and the competency. So if you know your stuff and you've got good attitude, fantastic. Then you're about half the battle won. The other thing that I've learned as well is humility. In one of the things that I've always had a problem with some uni students is that, and I certainly was one of those uni students when I first started, which is thinking you know a lot, which in reality you didn't. I did not, and I had to learn a very hard lesson before. And again, I had a very good mentor who told me that, stop talking, and listen. So had I not had that guidance from him, I would probably still be, blundering around, not, and not basically offending people such that you don't get opportunities offered. One of the things that we learn as well, and my teammates, my partners, and our investors will say the same, that they like our team because we have that sense of humility to learn. And our chairman always tells us that that's your greatest asset, which is that you are open to suggestion. You are very teachable. Continue to be that way even out of uni. Because while you're no longer students in uni, you are a student of life. And that learning never ends. I always share as well with uni students as well. Initiative and drive is very important. As people get older, I certainly can say that my drive may be a bit lower than when I was in uni, when I first started out, because you're older and you get tired, and you've got families, that. But there's no excuse to be not driven when you're younger, because it's a lot easier. As my mentors used to tell me, Colin, it's fine. I'm fine with you running around, like bull in a china shop, because it's fine, because I can hold you back if I need to. But it's very difficult to motivate someone who does not have the energy. Sometimes when Trump calls someone low energy, right, that's a huge insult. Yeah, it's a huge insult. It's worse than anything they can say. So, oh, this guy's low energy. Yeah, that is the worst insult ever. But there is a point, to it. And I say, look, be ready to seize opportunities as well. You never know when they come from. It could be from a friend. It could be from family. It could be something. Yeah. Assess it, analyze it, and then if you have the opportunity to seize it, you never know where it will take you. Certainly with our business, we seized the opportunity, because the choice for us at that crossroads was either to go back to corporate. I could be earning a very nice high-paying job at a private bank, or do this. Yeah. So that's me and one of my mentors. He's a retired banker from Deutsche Bank. So he always asks me after work, hey, come join me for a cigar, come join me for whiskey. You might get opportunities like that. Don't turn them down. Yeah, either a lifelong friendship will ensue, or you might be working for him down the track. I didn't get to work for him, unfortunately, because I took a different path. But the friendship endures to this day. Yeah. So you get opportunities like that when you are a young junior analyst, and when you've got someone, a VP or a director, take interest in you. Make sure you devote and you invest that time. Yeah. I always share, it's always about the team. So good teammates, good good people, they are rare, and you have to seize the opportunity to work with people like that. Because in times of crisis, a good team makes or breaks the company. And certainly this is the case for us. Yeah. So that's our project that we are doing right now. But that's it. Yeah.
Wonderful. Thank you so much for that, Colin. Are there any final questions? No. If not, well, yeah. Did you raise your hand? Yeah. Please feel free to unmute yourself. Anybody who would like to ask questions, please unmute yourself and go ahead.
Well, hey, Colin. Thanks for that. Awesome talk. I had a few questions, but I'll start short.
Sure.
Not to be too kind of upfront, but I have heard that just in the hedge world, generally, as an investor, that in the long run, indexes often beat hedge funds after considering fees. Do you feel like that's the case? So obviously, if you work for a hedge fund, you get paid, so it's fine. But as an investor and being kind of in that world, how do you feel about long-term investing in a hedge fund in total?
You don't get a chance to invest in a hedge fund unless you're a very high net worth individual. So the option is not open for many people. But if you do get a chance to, and it's a good hedge fund, you need to really know who the trader is, what's his mindset, basically you didn't know my head of trading because he has a strategy for us. I wasn't important enough to speak to, but my head of trader was always talking to investors about his strategies, and we had to follow his strategies. If you ask me long term, I would strongly disagree with that because in terms, yes, the index will outperform certain mutual funds, I agree. But if a hedge fund, it depends on the strategy. I can't tell you because we certainly did very well for our time. But then after I left, so maybe I'll share this. After I left, we had a very, very bad year in 2014 because of the Euro CHF unpack. And we were long that one. Yeah, when that happened. So if you then take that result in there over the 10 years, then probably yes. What will happen is that Black Swans event will disrupt that chain of return. So again, I would disagree because we do have more leverage and we do have more opportunities to make a better return. And if we are halfway decently good, a hedge fund should make a better return than a standard, mutual fund or index fund that tracks the market. But if you're talking about, do I want to sleep at night, and I don't want to think too much about strategy, then yes, maybe index fund it depends on your investment strategy and your time frame. Yeah,
awesome, thanks for that. I'll let other students jump in, but if we have time, I have another question later. Thank you.
Sure. I have time, don't worry, Jason.
Great.
Today.
Yeah, so everybody, I've launched a poll so that you can evaluate your experience today. And well, officially the talk is over, everybody. I thank you very much for coming. The COVID economy this semester is very much about bringing back past alumni. So Colin is the first that is coming back. We have other alumni who have also done property investment and working in different areas coming back as well too. For those of you who are interested in trading, we have a previous tutor, and I've just spoken to him today, Devraj, who's working as a trader in Hong Kong. Who is very interested to come back, and that so we're scheduling that COVID economy for October as well too. So I want to thank everybody for coming today. It's a very niche presentation, and thank you for all the wonderful questions. And yeah, so we're officially over, but Colin is more than happy to hang around. I'm available as well too. I'm not sure about Paul, but Paul may be happy to hang around as well. So yeah, if anybody has any further questions, please go ahead. Please unmute yourself. Please do ask. It's a rare opportunity to have Colin here with us. Ethan, go ahead.
Hi, Jason. I haven't taken your uni yet, but maybe I will as an elective. Just wondering, is there an email subscription list or something for these types of events? Because they're really good, and I really appreciate Colin's insight.
Ethan, that's actually a very good question. So these particular events are put together by Business School Broadcasting. It's a staff student club that Paul and myself run as staff producers. And we are currently in the process of putting together the infrastructure for that. So the way in which, number one, we typically advertise. So if there's something like this, which is very relevant to property students, I'll make an exception and email actually all the prior semester 1 2020 property students. I also contact all the other chief examiners in banking and finance, and I ask them if they think it's relevant for their particular students. They're happy to advertise as well too. I also advertise on the Monash Facebook, the announcements as well too. So I've been able to advertise for that this time around. And also what we can do is that we're also putting together a newsletter. So if you'd like to be included in these sorts of sort of a mailing list, I'll actually provide the email for Business School Broadcasting. So please send an email to that saying that I'd like to be included into a mailing list for these events.
Yeah, that'd be awesome.
Yeah, and I'll put that in chat right now.
Thanks.
And just send an email to the Business School Broadcasting email saying that I'd like to be included in your mailing list for the Code of Economy updates, we'll include you into those updates as well too.
Thanks so much, Jason.
You're very welcome, Ethan. Great. Any other questions? Please go ahead. Please feel free to unmute yourself and go ahead and ask.
Hey, I have one question regarding you starting your own company. I just wanted to know how you were able to secure fundings or something. I just wanted to gain some insights as later down the line, I want to, start out with my own.
Well, like I said, before you, first off, just to share before you talk to investors, the question many investors will ask you is that how much of your own money have you put into this, right? So what's your stake? What's your skin in it? That's usually the first and principal question that many investors ask. And if you've got a good plan, so first thing, the plan's got to pass. That's the smell test. And the second thing is, are you invested in it yourself? And if the answer is yes, then more likely or not, the investor, would be open to learning more, and then finally discussing what sort of returns and what sort of amount that he would put in your company. So keep in mind that whenever you ask people for money, there's always a price. So the question is, why should they invest in your company? And it could be about the business, it could be with you, it could be because of you, or sometimes I know a couple of my investors, they invested in me just because they liked me and my team very much, and they saw as good influence as a good influence for their own kids. That's a very honest answer. I'll tell you that.